and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the stock markets, starting from the benchmark index moves to sectoral indices and all the stocks that are buzzing the most today. Also, halfway through the earnings mark as far as Q4 is concerned, where do the Nifty companies really stand and what should be your strategy on them? Which are the stocks that you should bet on post these Q4 results, the best of the lot, and what kind of target prices are the experts really looking at here? We'll get you all of that from the expert voices as well. But first up, a quick check on how the markets are doing at this point in time. Well, I should say that there is no more Monday blues because the markets are actually rallying, and how over 1% uptick for both the Sensex and the Nifty, 18,270. The current level for the Nifty, it's up by 200 points, a very strong up move. The Sensex also up by over 740 odd points, 61,793. The current level as far as the Sensex is concerned. Of course, it's the financials, the banks that are actually taking this market upward today. In fact, about 11 of the 13 sectoral indices are up in the green, and the major gainers on your screens from the banking and financial space, IndusInd Bank topping the charts 5% up as far as the top Nifty gainers are concerned. Bajaj Finance up 4.5%. Tata Motors in the faster lane, 4.5% uptick for that one as well. For Bajaj Finserv, ONGC, Hindalco, the other movers at this point in time as well. Apart from this, you do see some movement also in the power space, like power grid stocks are also up in trade. But what's not doing well? Well, Coal India amid the earnings fever. Dr. Reddy's, Adani Enterprises seeing slight profit booking at this point in time, about 1% down in trade. Sun Pharma, again concerns from the US FDA, and SBI Life Britannia. These are the stocks that are sulking, but you can actually see that the breadth is also very, very narrow for all of them, which are the losers, because the markets are clearly in a strong uptrend as we speak. Now, apart from this, let's get our views from the expert. Joining us now, Siddharth Khemka from Motilal Oswal Financial Services, Head of Retail Research. Siddharth, welcome to the show and thank you so much for taking the time out for this discussion. Looks like the markets are again back on a firm footing. What is your own sense of how the market's placed at this point?
Yeah, very good morning, Sakshi. If you look at the overall market setup, I think slowly and gradually we have seen the strength coming back into the Indian markets. There are several reasons for that. If you look at globally, things are now settling down with the US inflation inching lower, US Fed reaching the peak of its rate hike cycle. And on the domestic side, the earning seasons have picked up quite well so far. FIIs have turned positive on the cash segment consistently for last 10-11 days. And there has been increased traction in the broader market, which was a missing factor for last couple of months. So I think all that put together, if you look at the domestic key macro data points, that has been the strongest. The GST collections at highest ever, which is a record in itself. The other macro data too suggests that the domestic economy is on a strong footing. So all those things put us that the view from market is slowly and gradually on the higher side only.
Got that. A whole host of supportive factors that are leading markets higher in trade today. But let's focus on the domestic factor, and that is the earnings. That's going to be the focus of our discussion today. Halfway through the mark, March quarter earnings have largely been better than expected so far as we speak. Siddharth, your own sense, we've seen 26 companies of the Nifty 50 already report their earnings. What do you make of the earnings so far reported as far as the Nifty companies are concerned? And what's the kind of improvement that you've seen here on the earnings?
Yes, Sakshi. So very critical factor for the markets has been the earnings season. This is the final quarter of the financial year, and we hit right at the middle of the earnings season with 26 out of the 50 Nifty companies reported their earnings as of 4th of May. So that is last week. What is also important is that these 26 companies constitute 70% of the weightage of the Nifty. So the bulk of the earnings are in. And what do they suggest? They suggest that mostly the earnings have been in line with expectations. And so to give you just few numbers, that this entire so we looked at two numbers. One is the number of companies that have come out with coverage from our overall coverage universe, as well as from the earnings from the Nifty segment. So if you
Yeah.
look at if the profit from the 26 Nifty companies that have declared, the net profit has gone up by 10%. So they have grown by 10% compared to our expectation of 7%. So that is
Okay.
clearly better than our expectation. And that has been mainly fueled by three sectors, which is largely by the financials, both on the you can say banking as well as on the NBFC side, then from the automotive sector, and to some extent from the IT sector. So these three
Okay.
sectors have largely contributed to the growth in the earnings. And on the other side, on the flip side, metals have something that have dragged earnings, largely driven by Tata Steel, which saw a sharp plunge of 83% in its net profit.
Mm-hmm. Okay. Great that you put out the context at large for all our viewers to really understand the broad picture of which are the spaces that have performed better and which are the spaces that have been laggard so far. Let's break it down further for our viewers as well. In terms of the Nifty 50 companies per se, which have been the best performing companies so far as per you in terms of the earnings?
Yeah, so if you look at the Nifty 50, the heavyweights have done well so far, and that is where the market is getting comfort from. So if you look at the five companies that have contributed bulk of the growth, you have Reliance, you have Axis, you have ICICI, you have HDFC Bank, and TCS. They have together contributed to almost 120% of the incremental earnings accretion that we have seen. On the flip side, Tata Steel, as I said, that is pulled down, but that has led to the 10% growth in the Nifty earnings.
Got that. And which companies have emerged as disappointments as far as the Nifty companies are concerned per you?
Yeah. So two specific companies, as I said, one is Tata Steel, which dragged the earnings by almost 90%, the increase or the growth that we call at the incremental Y-on-Y accretion. And the second was Tech Mahindra, which has dragged the earnings growth by 2%. So these two put together have been the major laggards from the Nifty universe.
Got that. You bank BFSI space, you did say that has clearly outperformed in the earnings so far. Apart from in the BFSI space, which are the banks that or the financial names that have actually outperformed the rest?
Yeah, so clearly, if you look at the BFSI space, clearly divided into banks, the NBFCs which are lending, and the NBFCs which are not lending. Within the banks, we have seen earnings momentum continuing with most banks reported expansion in margins, and asset quality continued to improve. Deposit growth has also remained healthy, and surprisingly, what we saw is that CASA mix was stable across banks. So if you look at in terms of the banking results, HDFC, ICICI, Axis, they have all reported strong earnings, while there has been marginal miss from the likes of IndusInd, from the likes of Federal Bank. But also, if you look at some of the smaller banks, they have come out with very strong numbers. The likes of IDFC First Bank reported very strong numbers. Some of the smaller PSU banks that have come out with numbers, they reported very strong numbers.
Got that. Any of your top bets out of the stocks that are and the companies that have already come out with the earnings of this whole Nifty basket? Any particular top two or three stocks that you've really bet on post the earnings and you believe investors can definitely focus on them post the earnings now?
Yeah, so within the banking space, if you look at specifically, we would like to highlight ICICI Bank as our preferred pick within the large private banking space, and within the mid or small size banks, IDFC First Bank is at an inflection point. The legacy book is now seeing a smaller impact on the numbers. The bank is at an inflection point where the earnings growth, the profitability, and the granularity in the retail space is adding to overall improvement in the financial metrics, be it the loan book growth, be it the asset quality, or be it the return ratios. So I think these two banks, ICICI and IDFC First, would be our preferred picks within the overall banking space.
Got that. And from for the rest of the earnings season now, what is your outlook there? Which are the sectors that may look promising going forward from here? Any particular companies that you're looking out at?
Yes, Sakshi. So if you look at, I think this trend should continue among the banks. SBI is still yet to report its numbers. Automotive companies have been reporting strong numbers, both OEMs as well as auto ancillary companies. That trend should continue. Within the IT space, bulk of the numbers have already been declared. Capital goods is a space where we believe the numbers should come out very strong on back of healthy execution, strong order book, improvement in margins. So that is a space definitely worthy to look out for. Cement is another space where the sequential decline in cost has helped. Only few companies have reported numbers so far and that have
Sure.
come out pretty well. So that is another space, cement, that should come out with strong numbers and definitely worth keeping on radar.
Right. One more space that I want your view is on the new age companies which are about to report earnings. Paytm has already reported its earnings over the weekend, and the stock has really reacted quite sharply, 5% up in trade today. Your own sense of what did you read through, since Paytm has now come under your coverage area as well? Very recently you put it. These earnings, have they come in as per your own expectations? What is it that you really liked about the earnings? And post the earnings, now what is your own sense of how should investors be approaching this stock?
Yes, actually, definitely. I think there has been a lot of debate with especially with the new age tech companies, disappointing performance after the IPO. But I think somewhere now, some of these companies have started to showing us the marked improvement in the overall financials, which is the point that we were looking for since the days of these companies got listed. That the market would start rewarding the day they start seeing visibility in terms of profitability. So Paytm last quarter Q3 reported a good surprise in terms of improvement in profitability. The same trend continued in Q4. So the net loss moderated to 1.7 billion rupees from 3.9 billion in Q3. The total revenue was supported by growth in GMV, plus the disbursements on the lending side has been pretty strong. So overall, I think the company is seeing a strong improvement. There has been sustained momentum in the GMV. There has been a strong, robust growth in disbursements. There is traction in the subscription devices, the merchant payment devices, which is leading to the network effect that Paytm is having and helping it on its lending business. I think gradual improvement in operating leverage has boosted the contribution margin to above 50%, is now at 52%. And we expect the operating leverage will continue to drive operational profitability going forward. So thus, I think, as I said, there has been growth across the broad spectrum of the businesses that they are present in. Profitability is now visible much earlier than what the management was guiding earlier. On back of that, we believe that the stocks re-rating should continue. We have a target price of 900, which gives a decent 25-30% upside from current levels.
So is this still a conservative target price that you would say? Do you believe the stock still has potential to perhaps even look further from these levels?
So I think it's a decent upside from current levels, but as and when the performance keeps continues to improve, we will keep reviewing the stock in terms of our expectations, our estimates, and that should lead to continuous re-rating over the next several quarters.
Got that. Thank you so much, Siddharth, for being with us on the show and discussing all these insights from what have we read through so far. As the halfway mark, we have seen on Q4 earnings, the companies, the stocks and the sectors to really keep on the radar even for the rest of the earnings season going forward from here, and your own sense of how new age basket is likely to perform going forward from here too. Many thanks for being with us. The market's on a very strong footing on Monday, starting off the week, 750 points uptick for the Sensex, 61,800 now. For the Sensex is up by 1.2%. Similarly, 200 points of a jump on the Nifty as well, 18,273 the current level for this one as well. So very, very strong, and it's a broad-based buying that you can actually see with all sectors, most of the sectors. The broader markets also really performing in today's trading action. We'll keep an eye on how the markets really move from here, the last 2.5 hours of trade, and where should you be really keeping your focus. To track the market momentum, you should stick with us on Business Today TV. Don't forget to subscribe to this channel, and also continue to stick with us on our other social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Until then, thanks for tuning in.